Hello guys, Dividend Enjoyer here, and today I'm going to give an update on my stock portfolio, kind of breaking down each one of my positions, why I'm holding them, anything that's changed within the portfolios, and kind of give you guys a background on why I've invested in these companies, because I feel like I've made a lot of videos being very critical of other stocks, and I think it's important to do that when you're investing. So I'm going to show you guys exactly what I'm investing in and give the background on why I invested, when I invested, if I'm going to add more, what the company does, and all of those different things so that you can kind of pick my brain and understand what I'm looking for when I'm doing research and valuing different companies. As always, I just want to start by saying that none of this is financial advice and I'm not a financial advisor. Please do your own research before buying anything. Without further ado, let's get into the video. So I'm going to start out with my first account, which is my larger and more active account. This is my Chase account, currently valued at $13,099.16. And I'm up $192.69 in this account, not including any realized gains. The lowest position I have in this account currently is Prologis Inc., ticker symbol PLD. This is a triple net warehouse REIT. So they own these logistics warehouses, and triple net leases, if you're not familiar with that, are essentially leases where the renter pays all of the fees, including the tax, including the maintenance, including improvements. Everything is essentially paid for by the person leasing the warehouse, and that's very advantageous for a company when you're just able to collect rent on something you paid for. And the way I actually found this company is very interesting. I was doing research for a stock analysis video on some more niche stocks, because I like to have a lot of stock analysis videos on things that are more niche and that are underrepresented in YouTube, that a lot of people just aren't covering because they don't think enough people are looking at it. And when I did my valuation, I found the stock to be worth around $118 when it was currently trading at around $112. And I decided to put my money where my mouth is and really just invest a decent amount of money into it, because I thought that it was a very easy company to understand with a good dividend in a good business. And those are sometimes some of the best companies you can look for. If it's something very easy to understand that pretty much anyone could run and they're just collecting cash pretty consistently, and you find that the value is lower than what it's trading for, I think that that's a very smart thing to pursue. And so I did, and I'm currently up 8.63% on the stock, but this is kind of misleading because they reported better than expected earnings, which drove the stock up. And currently, I'm not going to sell this stock. I have no plans to ever sell this stock. I'd like to eventually add more to it, but I'd like it to dip a little bit more because I think it's very close to fair value now. I like the type of stocks where they pay a very consistent, reliable dividend, and you can just sit back and collect the money. That's kind of my goal with investing, is to have a lot of great stocks that either grow exponentially over time that I'm not trading very much and just adding more of a position to, or stocks that just pay a very reliable increasing dividend with a higher compound annual growth rate and just snowballing those into larger and larger positions until I need the money, and then I can change it so that the dividends are just paying me directly. And Prologis fits that profile perfectly. I really wish I would have bought more at the time, but I just didn't have access to the right amount of capital to do that. And I'm very happy with this investment. I'm very happy because I created this YouTube partially for that, to be able to do more stock research and have an excuse to do that and learn about more and more interesting companies, because if I hadn't have made my YouTube channel, I never would have found this stock. Moving on to the next stock that we have, it's American Express Company, ticker symbol AXP, currently up 4.71%, and there really isn't a lot to say about this stock. It's very simple to understand. They make more money when their consumers spend more money. And they also benefit greatly from network effects, because the more people that are part of the American Express ecosystem, the more that they're able to improve the services. And then because they improve the services, the more people want to come to the American Express ecosystem. And so I think that this stock is probably trading at a premium right now. But it's hard to say, because when you have so much quality and so much consistent growth, you have to kind of pay a premium from a DCF perspective usually to get that type of a stock that's just so strong and so consistent, and that's going to probably be worth more money in the future. So this is like the number one stock that I'm hoping goes down so that I can add a higher position to it, because I have a very long-term horizon, and I think that American Express is the perfect company to own if you have a long-term investing outlook. And I think that even if you bought in now, it's probably overvalued in my opinion, so I'm not going to buy in. But I wouldn't fault anyone for doing that, because in 1 year's time, you're going to be in a good place more than likely. And you could see that I'm already up 4.71%. I think that the stock is a great buy from me. And I really wish, like I said with Prologis, I really wish I would have bought more of this company, because it's just such an excellent company. Very easy. Just you get to collect your dividend and sit back once you buy in. The hard part's buying in, because it is very expensive from a DCF perspective. I could completely understand not wanting to buy in or wanting to buy in at this price. I think it's a difficult company to actually value, because the perpetual growth is probably lower than that terminal value, just because the company is so strong, so consistent, and the margins are really good, and they're getting younger demographics, which is expanding their growth as well. Overall, there just aren't really enough nice things that I can say about American Express company. I think that it's just as quality as you can get of a company, as simple as you can get. There aren't crazy expenditures that they're having on the balance sheet, and overall just has a great track record of making money. Next up, we have Energy Transfer, ticker symbol ET. This stock is actually the stock that I own the most of, and I'm going to be showing you that in my Webull portfolio, which I don't really touch at all. Energy Transfer is a pipeline infrastructure company that charges companies a toll, or entities, people, whoever. They charge a toll to move natural gas through their pipelines. I think that this company is going to benefit greatly from the AI boom, because there's already crazy amounts of energy demand as it is, and we're just going to see that explode with the AI training, and Energy Transfer is in a perfect position to benefit from that. And also, another side note that's really nice about this company is it's very similar to railroad companies in that it's very inflation proof, because once you actually put the money into the pipeline, it's very painful to dish out that amount of money at the time. Over time, you're not going to have inflationary things that are affecting your business. I mean, once you pay for those pipes to be put in the ground, the money's spent, and it's that exact amount. If you would have waited a year, it would be 7% more, whatever inflation is at the time, right? So I think that this company is just very solid, great company. I own a ton of it. I just collect the dividends. And in my Webull account, I get paid about $104 a quarter. And that just goes right back into the Chase account, either in more Energy Transfer or fractional or whole shares of another company that I also think is really attractive. Next up, we have Waste Management Inc., ticker symbol WM. I'm up 9.99% on it so far, and I don't have enough nice things to say about Waste Management. It's an excellent company. It's probably the strongest company in my portfolio if there's a recession, because people aren't going to be canceling their garbage services. They do waste collection and a ton of other interesting things, like converting methane into natural gas from their garbage. But the really valuable thing about Waste Management is actually the permits for the landfills, because it's very difficult to get any kind of city or whatever to give you a permit for a landfill. Waste Management is, the leader in the waste industry. They're I believe the largest market cap waste company. I think that they're just going to continue to get bigger. They have a lot of organic growth. They also have a lot of acquisitions that are very solid. And this is just a very slow, consistent growing company that's very defensive, which I really enjoy. They reported good earnings, which caused the stock to go up more, which is honestly a negative for me, because I want to be buying into more of this stock. But it also has a very solid dividend, which I enjoy collecting. And overall, I just think that this stock is a great stock to own. I really think that you could justify having this be one of your top holdings in your own portfolio, and you'd be doing fine with that. Now, with that being said, I do want to say, and I don't know if I've already said this, but I'm not a financial advisor, and this is not financial advice. And now moving into the next stock that we have Meta Platforms, ticker symbol Meta. I'm up 19.63%, and this has just been like a unicorn stock. I mean, it's performed insanely well in a short period of time. I believe I bought my shares one was for $599 and another was maybe $635, something like that. And I did a DCF on this and I valued it around $800, and it's pretty close to that now. And I actually predicted that Meta and Amazon would be the two best performing stocks just overall in the Mag 7. And I think that Meta was a pretty easy slam dunk for me for a lot of reasons. Oftentimes on the channel when I do stock analysis videos, I talk about, surprise upsides and surprise downsides to a company. And I think that Meta has a lot more surprise upsides than they have surprise downsides. And when I did my DCF, they were extremely undervalued. And I believe a DCF is a very conservative metric to value stocks, which is why I like it, because you could be wrong and the stock could shoot up. But normally, if you're being very scrutinous and you're doing a DCF or some kind of modeling, you're not going to estimate that the stock's worth more than it actually is, right? So when I saw that Meta was around $800 for my own personal DCF or whatever it was around at the time, I bought 2 shares, and it was expensive, but I really think that they have a monopoly on social media. And if TikTok gets eliminated, they're going to absorb that user base back into their ecosystem. I also think that their research into AI will be very fruitful because they're going to be able to have, one, probably the best data training set because they own all of the data that's posted on their various platforms. And they're also going to be able to curate the AI so that it offers the best possible advertising, which is just going to grow the cash flows even more. I think that this stock is going to 5x in the future. I really do believe that, just because of all of the things that it has going for it. I think that Mark Zuckerberg's a very smart CEO, and I think that he understands how to move this stock forward in the correct way. And this stock has just been massively, insanely successful for me. I'm already up $241 on it, and I have, I do not want to sell this stock. I just want to hold it for a very long time. That's what I plan to do. I'm just going to sit on this stock for a very long time. If it dips below a certain point, I'll probably add more to it, but at the current price, it's just not attractive enough for me to want to buy more. What I am going to be buying more is probably our next stock, Amazon, ticker symbol AMZN. Now, Amazon, I really think is just a wonderful company with really a lot of growth in the future, specifically with AWS. I think that AI is going to be huge for them. I think that their goal in the future is going to be to automate some of their workforce in various ways or to just improve the efficiencies of the actual business. And I think that Amazon has a very stable and positive future going forward. It's also a very great business model when you really consider that they have the cash cow business of the logistical network that they've set up that's very monopolistic and a service that basically everyone I know uses and continues to use. So they have the subscriptions from that and all of the packages that people are buying to fund all of the other avenues of growth that they're looking towards. And I do think that you could make the argument that Amazon is probably too spread out with all the things that they're doing. But I think that I'd rather have my company be more spread out, looking for areas of growth and maybe fail to materialize on one or two of them, than be in Apple's situation and not really have a lot of growth prospects going forward into the future. I'm currently up 1.63% on Amazon. I've been up more in the past, but with it at this current value and with them beating their earnings previously, I think that Amazon is probably a great buy going into the future, and I'm going to continue buying more of this stock. Next up, we have Salesforce Inc., ticker symbol CRM. I really like this stock. I'm down 2.87% on it, and it's my second largest holding in this account, valued at around $1,961. They have their earnings coming up pretty soon, and I'm pretty excited for them. I think that the stock is very ahead of its time. I think that this is a stock that I'm going to regret not buying more of because I think that it's going to ascend into the levels of being very similar to a Microsoft or an Amazon or a Meta. I think that they're very smart in focusing on business to business AI solutions. And overall, the stock benefits greatly from network effects because once people are in this, Salesforce ecosystem, they love it, right? And then as they come in, Salesforce is able to improve the product even more so that more people want to come in. And another thing that this stock really has going for it is that it's very expensive to get out of the Salesforce ecosystem once you're in. And businesses love it so much that they just don't want to run their own CRM. And I think that Salesforce also is in a very good position because like I said with Amazon's very spread out looking for avenues of growth. Salesforce's biggest competitor is Microsoft. And I don't think that Microsoft's top talent is working on their CRM. I think that Salesforce is really going to win out with their agent force and with a lot of the different things that I've seen. It just seems like businesses love Salesforce's product. And there's not really much more to say about that. I mean, they're just going to continue to grow. They've been very consistently growing. They know when to spend money to improve the products and to improve their growth. And I think that overall, this stock is a great buy just in general. And at the current price level, I think that we're going to look back at this and think that it was an absolute steal. Now, it is expensive on paper with a pretty high price to earnings ratio, but overall, I think that you're paying for future growth that's not really comparable to a lot of the other big tech names in the Mag 7 or just in general. And I think that this is going to be a tech stock that consistently grows at a very alarming rate, and I'm happy to continue to hold this stock. I think that this stock, it's a little bit riskier than some of the other things that I've owned, but really Salesforce has already established itself and it's just going to continue to get better for them in my opinion. And finally, to round out the Chase account, we have VICI Properties, ticker symbol VICI, down 4.39% on this stock, but I was down significantly more. I was buying more whenever the stock dipped below $30. That was kind of my price target. I think it's worth around $32 or $33. But this is a very easy company to understand. It's also a triple net REIT type of company. They're the biggest owners of real estate on the Las Vegas Strip. And so they own a lot of the casinos. They own a lot of golf courses, things like that. Experiential real estate is really what VICI is all about. But when I say they own the casinos, that's not me saying that they're actually running the casinos. They don't own any of the gaming rights. They just get paid rent by the casinos. So as long as the casinos stay in business, VICI continues to make money. And again, with them being a triple net lease, they don't really have to pay any expenses. So the biggest downside to the stock is the high interest rates. But I think if you're a long-term investor, you can see that interest rates are going to continue to be cut. And I also have kind of an alternate, maybe more optimistic theory on VICI, is that a lot of people who need the high dividend yield that VICI pays are currently in treasury bonds or CDs or just fixed assets that pay them consistently with no risk because the rates are so high right now. And the rates being high also hurts them because they're borrowing so much money. But as the rates start to come down, I think that a lot of retirees and different people are going to be looking for different financial instruments to get consistent dividend income. And I think that they're going to rotate into REITs again. And I think that this stock is going to just continue to grow because it's so safe. And I really like very safe stocks with predictable cash flows to be at the foundation of my portfolio. And VICI fits that profile perfectly. I'm very happy to hold this. It's worth $4,800. It pays me a decent amount of dividends, and I'm happy to just snowball it for a very long period of time and not touch it. I don't know if in the future, if this stock doubles, if I would sell half and do kind of what I did with Energy Transfer and maybe put that half in the S&P and like that ETF, or put it in a different type of stock, or just hold it and just turn the dividends into cash and then put half into VICI and collect it. But I think that this stock is going to grow pretty consistently, and I'm happy to continue buying into this whenever it dips below $30 because it seems irrationally undervalued in my opinion, and I'm happy to hold this. I'm not panic selling out of it. I think that VICI is a very strong company, and the growth isn't going to necessarily be as big as a Salesforce, Amazon, or Meta, but it's very safe and consistent, and I really like that in my portfolio. Moving on to the Webull account, current value of the Webull account is $8,845.01. The lowest value position I have is actually in DraftKings, ticker symbol DKNG. I think pretty much everyone knows what DraftKings is. They're a mobile gambling company, and I'm currently up 34.78% on this stock. The stock's extremely volatile, considerable debt on their balance sheet, but I think that the growth is just going to continue to come in. I really personally just feel like they are the best growing stock that I have in any of my portfolios, but also the riskiest. I think that they're going to be a leader in online gambling and that they're just going to continue to grow their free cash flow over time. And I'm happy to just sit back and let this thing continue to grow. I don't want to sell out. There's not really too much more to say about DraftKings. Just kind of starting out. It's an early on company, and this could be an amazing investment that I wish I had more money in. The current value is only worth $231.64. Again, I'm up 34.78% in under a year of holding this. This initial amount was actually, I believe, half of what I got from wheeling the stock, which is kind of a financial strategy that I did before when I took on more risk. I essentially offered to sell puts and then sell calls at various strike prices, collected the premium, made a profit on it, and then put some of that profit back into the actual stock that I was doing this with. And so this is essentially a position that I don't really care about that much. I just kind of want the growth, want a little bit of risk in my portfolio that isn't necessarily an options contract. It's paid off for me, so I'm happy with it. Next up, we have Microsoft, which I have 5 shares or about $2,040. I'm down 3.41%, which doesn't really bother me. I think that this stock is probably oversold at this point. I did a DCF on it not too long ago, but that was without the updated new quarter's earnings. So I'm probably going to do another stock analysis video on Microsoft, break down whether or not I think it's a buy. I think you'll be hard pressed to find a better just company than Microsoft. I mean, this company is like an anomaly, 1 in a million type of, 1 in a billion probably type of company that's just so high quality and so amazing. And I really think that maybe I should add some of this to my Chase account. But for the Webull account, I just don't touch it. I don't put any money in. I really just take dividends out. And this stock's down 3.41% from when I initially bought in. And I want to just continue to hold the dividends and not sell this and just wait for the compound annual growth rate of the dividend to continue to increase. And maybe one day this value that I've put in is going to turn out to be worth a lot of money in dividend income. Finally, I have Energy Transfer, ticker symbol ET. The stock's currently worth $6,573.12, and the open gain is $2,700.36.06, or 71.31% of a gain. Now, this is kind of misleading because I've made more from selling out of this stock, but I've already talked about it in the Chase account. There really isn't that much to talk about. It pays me a lot of dividends. I collect those dividends and reinvest them into other things. Usually it's more Energy Transfer in the Chase account. This Webull account really is not going to change very much at all. I'm just going to collect those dividends, send them to my Chase account, and not think about this Webull account. And that's kind of my portfolio in a nutshell. I hope you guys really enjoyed this video because I like to make a video talking about the companies that I really do like and the companies that I think are undervalued or have some kind of unique trait that makes me want to buy into them. Let me know if you guys like this type of video, if you guys don't like this type of video, if you guys want me to go more in detail with a certain company on why I bought it, and just overall what you guys thought. So thank you for watching. Bye.